Good day traders, Stacey Burke from Stacey Burke Trading, and just going to go over again simple supply and demand or support and resistance levels on the 1 hour charts and also on the daily charts, but just going over some really simple stuff. I talk about this over and over again. The time of day is probably the most important factor for traders. London open, New York open, London close. These are high probability times that the market is going to be moving, and that's when the banks go in to work and that's when they leave. So the 50-60% of the volume, 70% of the volume at peak time is maybe even 80% of the volume of the 24-hour market is going to come into the market during that London-New York overlap. And I think traders are making things really complicated. I'm big on letting Mondays often trade without trading them, and then using Monday and Friday as my levels to determine if we're seeing a potential breakout or a reversal or a continuation. So looking on Monday's trading levels. So if I was to draw on Tuesday morning, this we're looking at the British pound. We're looking at September the 13th. 2016, and so on Friday I just did the most recent highs and lows as of Tuesday morning. So at Monday's close I put my high and low on the charts from Friday through Monday. So we can see that Monday has taken out Friday, one of the most recent high on Friday, and then as the market opened up on Tuesday, we had data come out at 4:30 a.m. Eastern Standard Time, New York, into the London Open. So London Open, roughly around the 9 a.m. candle, Greenwich Mean Time. It's come back into that range that's set up on Monday. We had a breakout, so again, a candle that's gone out of balance, and it did the same thing on the following candle. It closed below the low of the previous candle. And then the market gave almost a pin bar, not quite, but then the following candle had a wick that retested that high and closed inside of the wick. Now what's important about this 2 a.m. to 5 a.m. time frame is that often there will be a high or a low established between 2 a.m. and 5 a.m. New York time that will often last into the New York Open, or potentially even for the duration of that 24-hour session. So why is that information important? Go back, check this for yourself. It happens over and over again, almost day in and day out. If you potentially have a high or a low in place as of 5 a.m. New York, would that information be of value to you in terms of which direction you would want to be placing a trade in, at least until the open of the New York market or into the open of the New York market? So we see that bears potentially could have shorted this market using a 1 bar stop above the wick of that candle, the 5 a.m. candle. That market then proceeded to break out and auction down to where the Monday bull breakout began to retest potential stops below that low, and then the market again continued to auction down and extend the range of Monday into its lows. So now we see on Wednesday morning that the market has broken out and is currently retesting Tuesday's low. And as you can see, I have my line on there on Tuesday, and I'll also put a line on the short-term high that's been set up, and I'll wait for London Open, and we'll look to see if there's any trades that set up potentially allowing us to buy low or sell high. Now, if we were to, just let me rehash something else with that. You can draw trend lines, you can do whatever you want. I'm not as big on trend lines. I like to use horizontal breakouts. But again, even with trend line, first we had a pattern break, then we had a support and resistance level retested, and then a breakout. So that 2 a.m. to 5 a.m. rule is critical. And again, with New York, it obviously auctioned into the lows, into the London close. And at this point, I'd be saying that the short positions because the market closed near its lows, that people who were bearish to the market were content to stay in that trade and hold a position. That doesn't so far show me evidence that they have covered their short positions just yet. So, time of day, support and resistance. Again, I don't care what day you do it on, just start drawing levels and looking for similar situations. There's our 9 a.m. London breakout, so we had a breakout pullback and into the US Open, and again a breakout candle. There's a one candle stop. Often if your trade is more than one candle, I would revisit that and reanalyze your setup. I very rarely would be looking at anything more than a 1 bar stop on a 1 hour chart. So if we go to the daily and apply the same sort of approach, what's critical about the daily market is, of course, using monthly highs and lows, using weekly highs and lows, whatever's more prevalent, but the market will often retest support and resistance over and over again. And again, I do like to stay on side of momentum, so all the way through here I'd be looking for short trades, anything that couples into the moving average. As you can see now, we've gone sideways in what Al Brooks calls barbed wire, which is a range bound market. Basically, when you have that, you want to be trying to position yourself to sell high or buy low. Now the pound obviously has been a bit different because of the Brexit vote, but even if we scroll back randomly on the chart, just using monthly highs and lows or weekly highs and lows for opportunities to re-enter trades, staying on side with momentum. There are lots of simple trades setting up week in and week out, just using supply and demand or support and resistance, whatever you want to call it. So don't complicate things, traders. Keep it very simple. Manage the downside. If you want, look, one of the things that I will often do is I will look for these levels to be breached or encroached upon, but then I go to my 1 hour chart for the opportunity to enter that trade. Now, if you can't get to a 1 hour chart, then you might potentially want to use a 4 hour chart and stay on the side of momentum, or do not enter a trade until you can confirm that with momentum on the same side as the moving average. Just one of those things that can potentially set you up for a higher probability of success. But keep it simple, traders. Use support and resistance. Use the time of day. Look for the London 2 a.m. to 5 a.m. time frame to give you a high probability opportunity to being on right side of the market. So keep it simple, traders. Stay disciplined, stay focused, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.